We had a market day that broke several rules that typically don't get broken. One of which is the fact that bond yields were up, and so was tech. Tech was the leader. The Nasdaq did very well today. Typically, we see bond yields up and tech lag. Why is that? Shouldn't tech just go up regardless of what the bond market is doing? Couldn't pick two less related markets, tech and the bond market. Seem to be selling very different things, but to the same customers. Customers that want long-term returns. Let's look at the Treasury, for example. People who buy these 10, 30-year bonds, 20-year bonds, they are looking to get returns over a long period of time. They want return every year. They're not coming in and out. They're buying the bond, holding the bond, getting the money back. Essentially, perfectly in the proper world and whatnot. Tech promises the same thing. We're going to give you returns for a long time. This is a long-term opportunity, etc., etc., etc. So when bond yields go up, bond yields become more attractive, and the bond market is bigger than the stock market as a whole. That's just the way it is. So that takes, typically, money from the tech stocks and puts it into the bond market. Bond buyers, they're getting that money, or spending that money. Now, that's typically how it works. Today, it's not working that way. Is this the new trend? Is this going to be the case? I don't know, but there's one reason why I could see it happening, and that's inflation. Because with inflation, there's not necessarily rising bond yields. Yes, nominally, the numbers of the bond yields are going up, but the actual, if you take away the numbers, I lend you this much purchasing power. I want to get back that same purchasing power plus a little more purchasing power. That's, how it's supposed to go. Inflation, throws away the numbers essentially. So the way I see it being justified is if inflation just picks the numbers up across the board everywhere in the economy. So bond yields tick up, but real yields accounting for inflation don't really tick up that much. So here's another interesting point. Bond yields have been around 1% on the 10-year, low. Inflation has been higher than those yields. So that notion of giving you more buying power to receive that buying power plus more buying power is currently not happening. I'm giving you buying power and receiving less buying power. Interesting proposition. So bond yields do need to rise. The question is, does tech rise with it or not? I am concerned about mega cap tech. I have my fundamental long-term stocks that I like, not in mega cap tech, in CRISPR and other areas that I think are going to experience massive growth. But mega cap tech, in my opinion, has had a very large rally this year. And yes, they've had a very large rally for years now. So, this might be a dead argument. But I think the PE multiples, the cash, has reached a point where it's pretty expensive for what you're getting. Their potential to grow it, as far as I'm concerned, is not that much larger, but maybe it is. Maybe I'm proven wrong on that. So I think they've had their run because they've been gifted the perfect situation. And everyone, it seems like every fund manager has their Apple, their Google, their Facebook, etc., except for me. And who's the next buyer? I don't know. We'll see. It seems like they haven't gone away, and everyone's been having these stocks forever. But I think, for example, Mosaic at a very low price to earnings multiple with a dividend in a highly inflation corollary industry, sector of the economy, fertilizer, it's not going to go away. People are going to need food and fertilizer regardless of what happens. That is something I'd rather own than mega cap tech. So I'm sticking with that. Oil, next topic. down big this morning, over 4%. 4.39 was a number I saw. It could have been more than that, but I saw 4.39%. Finished the day down bad, not as bad. Last I checked, down 2.18%. That's a pretty big move in a single day. 2% in a single day. That's not demand and supply. You're not getting worldwide oil demand up 2% in a single day. What that is that's paper traders. That is paper traders. Speculators in there, futures traders on Wall Street in Chicago, buying and selling, seeing headlines and panicking. Which headlines? UN climate report saying for the 10,000th time that the climate emergency is upon us. 10th time in 40 years or so. And China locking down. I am more concerned about China than I am about the UN report. Yes, the UN report is scary, and it has an effect on a lot of people. That is a fact. It's understandable why it has an effect on so many people. The way I see it is, I look at the housing market. Malibu, still strong. The Hamptons, still strong. Miami, still strong after 100 years of this stuff. So, there's an Al Gore quote I love. Al Gore, former presidential candidate. It hasn't been this hot in 1,000 years. Hasn't been this hot in 1,000 years. What does that imply? It implies one thing with certainty. It was hotter 1,000 years ago. Before we had oil, it was hotter 1,000 years ago. Just 1,000. After Christ. It was after Christ. It was hotter. Before oil. Before the steam engine. That's one thing. You look at the prices of that stuff. Another thing. There was a period in world history when carbon levels were 40 times higher than they are right now. It's a lot of times higher. The period in which that occurred is known as the Cambrian explosion. What was the Cambrian explosion? Well, of course, sarcasm right here. Of course, it must have been a volcanic eruption that sent fumes into the earth, covering the world in smog, and global temperatures rose. Well, with CO2 up 40 times from here, which we will never achieve on cars and cows, global temperatures were up. They were up 10 degrees. It's a lot. It is a lot. But why is it called the Cambrian explosion? Because there was an explosion of life. Why was there an explosion of life? Where do plants get their nutrients? Excuse me, need water. Where do plants get their nutrients from? Is it the water? Is it the dirt? Getting their nutrients from the dirt through the roots? The roots taking in the nutrients and the stuff that makes the tree grow? No. Plants and trees get their bark, their leaves, their matter from carbon in the air. In the air. So, what does that make carbon? It makes carbon plant food, as it is the basis of all life, on Earth at least, carbon. The essential element, carbon. Diamonds, carbon. Now, there was a period in time where carbon was 40 times, not 40%, 40 times more prevalent in the atmosphere than it is now. Yet, we're at now. And last I checked, ExxonMobil wasn't taking 100 million cars off the road for a year in terms of carbon capture with only $10 billion of developmental investment. The planet is self-regulating. So for people to say irreversible climate change, like we're reaching a point of impossibility to reverse, I believe that statement is incorrect. Excuse me. Need more water. I'm a plant. Need water to grow, of course. But we all know that's incorrect. Plants grow through carbon. So, am I concerned about the UN report? Well, I'm concerned about energy for the same reason Elon is concerned about energy. There's a finite supply. The reason why he started Tesla, the reason why he sees it as necessary in the world is, one, yes, we need to have some rate of improvement. If we burn and just burn in perpetuity forever with unlimited supply, yeah, we'll have a problem. But Elon, if you listen to him talk, he says the actual problem is that there's a finite supply of oil under the ground. There's a finite supply. So in order for civilization to exist, in addition to getting a backup on another planet, we need to have renewable energy that isn't finite, at least for us in our scale. So, thus Tesla and renewable energy, not Tesla carbon capture. It's about the supply and the finiteness of the supply. And as an energy investor, I think that works in our favor. So we must invest when we're given benefit from the hysteria. So until next time, peace out.